Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's get on board our experts for today. We have Kunal Bothra as well as Ashish Kapoor joining us. Good morning, gentlemen. Thank you for waiting by. Time for the high risk and low risk ideas. So, Kunal, I'll come first to you. What are the ideas for the viewers today?
Morning, Cheryl, two buy calls which I will suggest for the viewers. The first one is a buy on PNB. I've been maintaining the bullish stance on many of the PSU banks. So I picked up PNB today. Stock on the verge of swing breakout. Buy with a target of 46. So expecting almost a 10 rupee uptick from current levels, and stop loss to be kept at 33 and a half levels. And the second is from the low risk category. It's a buy on Cipla. The stock is also nearing a strong bullish flag pattern breakout. So would expect a target of almost 1,000 plus over the near term, suggesting a buy with stop loss at 890 levels.
Morning to you as well, Kunal. We're also joined by Ashish Kapoor. Good morning, Ashish. What are your ideas for us today?
I also have PNB. That would be the high risk category, and PNB basically because of very low valuation. While public sector banks have lagged private sector banks in performance, but the valuation gap is extremely high. And currently PNB is trading at very low valuations, 0.7 price to book and 0.5 market cap to operating revenue. So that's a very extremely low valuation, and also they are going to get a lot of tailwind as a lot of the user industries which were earlier NPAs were in metals and engineering. So with the way the metals are coming back and the industry is reviving, a lot of NPAs are going to recover. So NIMs are going to likely to improve, and with so much of tailwind and such low valuation, it makes sense to buy here. We have a target here of 45 rupees. This is the high risk. The low risk idea is HCL Tech. In general, last 2 weeks, the IT sector has underperformed. HCL Tech in particular, after the bad results, has come down sharply. The present price presents a very good entry level in our opinion. HCL Tech would get good traction going forward due to cloud migration as well as cyber security solutions. They also will get help of the DWS takeover which they have done. Overall, the valuations are still at a significant discount to TCS and Infosys. We believe that 1100 is a target which it should achieve. Currently, is trading at 15 times 2023 forward earnings compared to 21 and 25 of TCS and Infosys. The valuation gap should narrow to about 18 times, and that would give a target of 1100 rupees. This is a low risk because I really think that HCL Tech would make money either way, even if an investor can hold on for some period of time.
All right, so those are the ideas coming in from Ashish as well. Let's get on board then our viewer queries. And our first query is coming in from Ritesh on YouTube. He's saying that he's bought Indiabulls Housing 2020 May call just a few minutes ago. He's asking if there's any breakout or trend reversal that is visible on the charts. Kunal, I'll come to you for this one. Indiabulls Housing 2020 May call.
I think it's 220 strike, May call for Indiabulls Housing, but I think it's not a bad trade as such. The stock has just given a breakout today above the 200 moving average and the 50 moving average combined. What has been very, very interesting on charts, is that the 50 and the 200 moving average were just on the verge of giving a bearish crossover. And today is the breakout day for that. So, which means that the bearish crossover may not happen, and you might see the stock moving up significantly higher. So, this pace of uptrend which you're seeing for Indiabulls Housing, I think I would just sense that this could intensify. So, I think it's a very good trade, for Indiabulls Housing. Probably if you can just carry forward this to June or roll it over to June, I think then it could be much more beneficial, because then you'll have a buffer of not just 5 or 6 trading sessions but beyond that as well. I think it's a good strategy to hold on to Indiabulls Housing. Even on the cash front, if you can try and take some advantage on the cash side as well, I think you can get some decent short-term returns into the stock price purely on base of momentum.
Right, I stand corrected there. Thanks, Kunal, for pointing that out. Indiabulls Housing to a 220 May call. Sorry, I stand corrected there. But Alex, which is the next query that you have?
Well, this one's on Britannia. It's actually a stock that is in focus today. It's down over 2%. But Danny Verghese is wondering whether to get in at the current market price for the medium to long term. So I will come to you on this one, Ashish. Would you use corrections like the one that we've seen today, as well as I think over the last month or so it's down about 7.5%? Would you think that that's a good opportunity to accumulate the stock?
Yes, I would think so. I think the company is doing fairly well and also in a very safe spot, which is the the regular consumption items. And over the last few years, the company has got re-rated because of continuous improvement in revenues as well as operating parameters. The company, I think, would continue to deliver 15-20% returns regularly going forward. So I think it's a very safe and a good stock for anybody to have in one's portfolio, and certainly these declines can be used to add this to your portfolio.
Our next query is an email query coming in from N. Sankar asking about South Indian Bank. He's saying he's holding 78,000 shares of South Indian Bank that he's bought at around 7 rupees odd levels. He wants to know for how long can he continue to hold on to this particular stock. Ashish, what's your view on South Indian Bank?
Positive. I think the way now we are poised to recover once the the COVID scare gets over. The economy is likely to get a lot of tailwind, so that would benefit a lot. That will be a big benefit for these smaller banks going forward. So I think South Indian Bank is got it at a very good rate, 7 rupees. Continue to hold on. I still have a buy here. I think that we could easily look at about a 15-16 rupees on this in time to come. So certainly, if you have time with you, stay invested. It's still a very cheap. It's very cheap stock available at a very decent valuation, and with the expectation of traction coming in economy in large, I think these banks are likely to do very well going forward. So stay invested and keep a target of about 15 rupees on this.
Okay, we're talking about Cadila next. Kunal, I'm going to come to you on this one because it's an options question. Sherry's got in for the June 670 strike call. Sherry's asking whether this value will erode over time.
I think it will, it should erode over time, because what has been happening is, there was a period of very strong and steady uptrend for Cadila from 400 levels to 650 levels. Now these pharma stocks are you have to understand the behavior of stocks and sectors whenever you're looking at punting or betting on the options front as well. That these are not stocks which are highly prone towards consistent periods of high trending. These are stocks which will go through a run up for a short duration of time, and they would take a prolonged bit of pause. So you have to be very careful with the kind of out of the money call options when you buy into these stocks, because if you buy it way out of the money, like a 10% strike or 7% strike higher from current levels, then it's possible that you would go through a time erosion, specifically if you're looking at it as a June expiry. So I would suggest that relook at your strategy. If you're looking at something on the very short term, then I would suggest something on Cipla, maybe a 950 call for the month of June or 960 call for the month of June. I think it's worth something you can look at specifically from a short term trading view.
All right, our next query is coming from Balan. He wants to talk. He wants the view on PSU insurance company like GIC and New India Assurance. What's the take on this particular on these counters? Because he's holding both of these stocks, so he wants to know whether it makes sense to stay put or sell these counters. Ashish, what's your view coming in on PSU insurance company like GIC and New India Assurance?
Certainly bullish on LIC. LIC housing. One more insurance. I'm generally bullish on insurance companies, and I think the public sector insurance companies would also fit in the bill. But I really haven't tracked GIC lately. But overall, the sector view outlook is bullish. But in GIC in particular, I haven't looked at it lately.
GIC Housing Finance, GIC Re. All right, I just want to point out that it's not, so you may see the tickers on the screen, that's LIC Housing Finance, but it's actually GIC Re that we're talking about, the reinsurance company that Balan wanted to know about. All right, and we have, Balan, spoken about private sector insurance companies in the past, and I think a lot of our experts have pointed out that they are positive on the insurance sector as a whole. Let's take another question. This one is from Shanmuga Sundaram, and Shanmuga is asking about Alembic Pharma, which is currently trading about a 0.6% in the red right now. Bought 45 shares at levels of 955. Kunal asking whether he should hold on for another 6 months.
Well, you can hold on for another 6 months. I think it's not a bad bet. The stock is consolidating. For last 4 months, from February start or January end, the stock had come back into this grinding range. 918,000 approximately is the pivot range or pivot point for the stock. And you see the stock moving up 50 rupees higher or I think 100 rupees lower. So that's been the moderate range for Alembic Pharma. So it's a stock which is consolidating. And I think it's not a bad bet that you have a time frame of another 6 months. So I think given the next 6 months, there is a strong possibility that this consolidation may get over soon, and you might see the stock getting back on the course of moving up higher, say back to the levels of 1100, 1150, which it used to trade, I think a quarter or two back. So I think at 955, it's a good bet. You can hold on to your investments and look out for 6 months to 9 months target frame of approximately 1050 to 1100 plus.
All right, our next query is coming in from Santi, talking about Shobha, saying that they've bought 100 shares at 447 rupees per share. The management had said that they saw strong sales as well as collections, and because of that, he saw the stock price also rise to about 550 odd levels. But you can see that the stock is now down from those levels. Wants to know that in anticipation of good FY21 results, is it good to increase the position in Shobha and aiming for a target of around 550 to 600 rupees per share? Ashish, what's your take on Shobha? Are we expected to see a smart uptick coming in this stock, given we're going to see good earnings for FY21, as March sales were definitely good for Shobha?
Well, I'm quite bullish on the real estate sector as a whole, because I think the correction here has been pretty long now. I think it's time, for the real estate sector to start coming back and start gaining traction. In particular, Shobha is actually quite a good player, very well managed. Even in these difficult times, they have managed to put up a very good performance. So as things improve, I think this would certainly lead the way up. So Shobha, certainly a very good idea within the real estate space, one of the much better managed companies. So yes, target would be achieved around 600, is easily achievable. So I think the investor can stay invested. It's certainly a good stock, and he has managed to buy it at a good level.
I'm going to come across to you, Kunal, and hopefully you have a view on this counter. Amrutanjan Healthcare. It is a counter that has seen a gain of 19% over the last month, currently trading at just around 738, 739. We've got Sagar, who's bought at levels of 350 to 360 and asking whether he should book profits at this point. I think it has been established over the past several days that Sagar has made quite a few good bets and is making quite a bit of money. So Sagar, if you want to buy me a cup of tea sometime, you're more than welcome.
Well, yeah, absolutely. I think Sagar has done phenomenally well. I keep, seeing the queries from him as well. So phenomenal job, Sagar, yet again. I think he's done fabulously well. Managed to hold on to a stock, and I think the rewards are pretty clear in front of you. The stock has more than doubled from your, purchase price. But I think the question now is very, very interesting, because whether to book out profits over here or whether to try and ride the journey going forward. So it's going to be always tricky to try and look at this, because what the short term and the medium term charts indicates for a stock like Amrutanjan is a very strong trending breakout move. Now the concern is that how long and how strong can the trends last for a rather a higher duration of time. So from look at it in the last 1.5 or 2 months, from 450, 500 levels, it's moved up to 750. So it's a rally of almost 50% in just a matter of the last 1.5 odd month. Now, whenever you typically see such kind of rally, there's always a concern that maybe you might see some sort of a pause or corrections. But those are specifically for individuals who bought at slightly lower levels and then are just about in the money. Since you bought at much lower levels, I would suggest a hold. And even if the stock corrects and say comes back to 600, 650 levels, I think that's still a very strong support zone for the stock, because what this move has done for Amrutanjan is to try and set the tone higher for the next couple of quarters and the next couple of years as well. So I would suggest the hold specifically if your time frame is long term.
All right. The next query is also for you, Kunal. This is coming in from Pavan Kumar. He's saying that he's eroded 60% of wealth in Reliance May 2100 call. He's asking, should I save the residue wealth by exiting?
A better strategy to try and exit the stock. It's trading in a band, and this is what I was indicating previously as well, that for you to try and buy a call option, you have to wait for the stock to just about nudge towards a breakout. Now for Reliance Industries, the stock has been taken a lot of resistance at the 2050 levels. It's still below the 200 moving average. So you either have to wait for a pop to happen where the stock breaks out the resistance on price, or it breaks out of this 200 moving average resistance. Till now, the stock is not showing any kind of signs. And when you generally don't see any signals, which means that the stock is lacking momentum. And in a momentum lacking stock, I would not advise buying call options. So I think it's a prudent strategy to try and exit over here. Since you've already seen an erosion of more than 70% of your premium, I would suggest that preserve this remaining capital and then wait for the stock to cross that 2050 hurdle or the 200 moving average to try and take position back again.
Okay, Ashish, I want to come to you on this next one. It's a bit of an involved question, but you don't need to go into too many details. Perhaps if you can just give a general view. Rajiv's asking about his investment in stocks that are either metal counters or related to metal. So he's got Graphite India, HEG and Mishra Dhatu. He wants to exit one of them and add another stock in the metal space, perhaps one that focuses on copper or aluminium. What would you suggest?
Hindustan Copper, and generally yes, metal cycle should continue doing well, and I don't have any doubt that over a period of time he'll make money. Mr. Dhatu also is looking very good. Certainly hold on that. Now both HEG and Graphite are very similar kind of stocks. They both have a similar product line. So I think he could book one of them, possibly the one in whichever he's making more money. So then that way he would have a steel ancillary, which is a graphite stock, Mishra Dhatu, which is a mining stock, and also Hindustan Copper, which is a copper stock. So that would be a little more diversified and well-balanced portfolio.
All right, our next query is coming in from Joby. He's saying that he's holding V-Guard, which he bought at 50 rupees per share levels. He wants to know whether he should continue to hold or should he go ahead and sell the counter. What's the take on V-Guard, Kunal?
It's a good chart. The breakout is still yet to happen for V-Guard. I think 260 or 265 thereabouts is the breakout point for the stock. So you can hold on to the stock. It's just about consolidating. Wait for that breakout to happen, and then I believe that you could see a much more bigger move coming out in the stock over the next few quarters whenever the breakout happens for the stock. So I think you should hold it patiently, specifically waiting for the breakout about 260.
I mean, Kunal, he's been patient so far, right? He's been holding for quite a while and he's made quite a bit of money on this trade. Let's go across to Padma's question then. We've got Padma asking a question about Borosil Renewables, bought at levels of 284. Should you hold or sell is a question. Ashish, come to you on this one. On the fundamentals, do you think it's a hold?
It is. I think the company has very bright prospects going forward, and certainly the investors should hold on. Difficult to put a target on these kind of growth stories, but certainly try and hold it for as long as you can. The story has just about started, so it's a long way to go here, and I think the stock has a huge upside potential over the next few years.
All right. This question is coming from Seems Kumari, saying that should bought Tata Power at 112 rupees per share. Wants to know what sort of target can she look at with the next, with keeping in mind the next 1 month. Kunal, what's your take on Tata Power? How are the charts looking for this counter?
Well, I would advise that don't look at stocks like Tata Power just for the next few weeks or 1 or 2 months. I think these are very top quality names, and I for one believe that Tata Power has given a multi-year breakout almost a 13-year breakout. Now, for a 13-year breakout to pan out, you can't have a time frame of just few weeks and months. So first of all, tweak your time frame and look at it as specifically from a longer term view. And also, I think on the other hand, since you bought at slight higher levels, I would advise that use these strategic corrections which happen to the stock price from your cost price as good averaging opportunities. I think closer to 96, 98 could be a first level where you can look to average. And if the stock happened to come back to say sub 90 levels, I think that's another level for you to look to average further. I think it's a top quality stock given a very strong and a solid breakout, almost a 13-year breakout on Tata Power. I would suggest the hold specifically and increase your time frame from a couple of weeks or 1 month to at least another couple of years.
I would encourage you gentlemen to keep your answers a little shorter. We'll try and fit in as many as possible over the next couple of minutes. I want to start with HEG and Graphite. I know we took a fundamental view, but do you have a very quick technical view up to Deepavali is the question, Kunal?
Both of them are exceptional stocks. I do track these stocks quite occasionally. I've been recommending on channel as well. I think both these stocks are quite well. And look at this as specifically from a longer term play. These stocks have come back to a consolidation zone. So buying at current levels, for example, HEG at 2200, 2240, where it's trading currently, I think seems to be an attractive buy level. Specifically, if you're in for slight high beta as well as from a longer term view.
Next query is coming from Jacob on Kansai Nerolac. He's bought 434 shares at 567 rupees per share. He wants to know what's the outlook looking like for Kansai Nerolac. Ashish, how is Kansai looking like? Outlook bright for this paint company?
Generally, I think the paint companies have been doing pretty well, but my take on this would be that, I mean, the company which I quite like now, which has not done so well as Asian Paints, is Berger Paints. So if I have to choose a paint company to invest in now, it would be Berger Paints. So that would be my pick. Having said that, if the investor still wants to remain invested in Kansai Nerolac, I think certainly can stay invested. But Berger Paints would be a better option to stay invested in.
Okay, Kunal, coming to you for this next one. Rajan's asking about the short-term prospects for ONGC on the charts.
The short-term prospects for ONGC would depend that when and how the stock will break past about that 120 mark. I think a breakout above 120 is what you should be waiting for, and whenever that breakout happens, I think that's where you might see the stock going into a different range altogether, moving up from 60 to 120 as a range to what I foresee as 120 to 180 on the upside. So I would say that wait for a breakout. If you want to anticipate a breakout and take an initial trade, that's up to you. But then I would suggest that wait for a breakout above 120. That's where you will get. There is a probability that you will get a much more higher return into a stock like ONGC.
All right, and that was the last query for today. Thank you, Kunal, as well as Ashish, for joining us on the show, giving us your picks, as well as resolving the viewer queries. And on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.